Greetings, Dwayne, CFRN. We're going to do a real quick, yeah, I know, I always say that, recap of the one trade a day alerts from the past week. I actually think it will be quick because in the S&P, we only triggered twice. Now, why would I bother to fire up the old video cam and show you a week where we only triggered twice? Well, let me remind you that the one trade a day alerts are $75 per month per market. There is a minimum of 2 markets. We do have a great special right now that allows you to get the 90-day mentoring program in a 12-month package, plus 12 months of the concierge trade alerts and 12 months of the one trade a days. All right. So I'm bold enough to come out and tell you that because we had the odd action that we had, the topping action in the S&P all week, we finally got the sell-off we were looking for just in time for the holiday rally, but we only missed our third and final target by 2 points. But I've showed you that already in the other video. I'm going to show you in this video. Here's the one trade a day. The 2 days that we actually triggered were Wednesday and Thursday. Markets were closed Friday. Okay. Now, on March 23rd at 11:30 a.m., the one trade a days are always published at 11:30 a.m. Eastern at Emini Futures Trading.com. That's all we use that website for, is to publish the one trade a days. Now, when we published at 11:30 on the 23rd, we said, you want to buy 41 or sell 25. Let me go over this just one time, and I won't say it for each market. Every time I put out a concierge trade alert or one trade a day, being a trader, I can't help but have a bias. You know, even though I'm fully convinced that the market's headed significantly lower, I could be wrong. I have been wrong. My goal is not to prove to you how good I am, how clever I am, how prophetic I am, but my goal is to provide you with trades that you can use each and every day to become consistently profitable in the markets with. All right. So Monday, Tuesday, and Wednesday, they just didn't trigger. It's not that we got stopped out. It's not that it didn't make it to target. We didn't trigger 3 days in a row. I don't know if that's ever happened since we started the one trade a days, but it sure happened this week. Okay. On the 23rd, we said to sell, and we said this at 11:30 a.m. Eastern, sell 2025. Okay. We finally got around to 2025 here. And you're going, wait a minute, that's 2030. That's minus 12. What time is that? 8:30? Yep. That's the thing about the one trade a days and the concierge trade alerts. They're good until the next set is issued. I email the concierge trade alerts. I publish the one trade a days. How did it come to be that way? Long story, I'll bore you later, okay? So we initially trigger, and then we have a drawdown. Okay? If you're using the dynamic structure of the market to place your stop, you may have been stopped out on this trade. Okay, that happens. We get stopped out. So I'm bold enough to come and make a video and tell you that for 3 days in a row in the S&P 500, we didn't trigger. And then when we finally trigger, we get stopped out. Yeah, that's the truth about trading. That's what really happened. That's why I don't have any problem telling you about it, because that's what really happened. So then we trigger again, okay, 2,300 hours. We don't make a whole lot of headwind. Remember, we're selling 2025. Now, we're not getting stopped out here, because you got to have a stop, and it's not going to be that close. And in one-on-one mentoring sessions as a student, I'm going to teach you exactly where to put your stop. Actually, the market is going to tell you where to put your stop. I'm going to teach you how to talk to the market and let the market tell you, okay? So the first significant move down, what do? We get down to a swing low of 2022. So that's 3 points, all right? Our daily goal is 2 points. So 3 points, anything to write home about? Well, not so much, but it is what it is, 3 points. Okay, not 4. Adjust my mic so I can see my keyboard. How about that? Is that a 3? Yeah, that's a 3 points, not ticks, but points. Now, the S&P 500 pays $50 per point. Okay. Now, if you have graduated to the 10 contract level or the 20 contract level, getting to Wednesday, finally getting a trade, and then getting stopped out, or getting part of 3 points. You know, maybe you were stopped out here, maybe you weren't. Okay. Okay, maybe you weren't, maybe you were. But the market made 3 points available. $50 a point, that's $150 per contract. We never get out at the exact swing low or swing high. Our methodology is not designed to do that. It's designed to take a bite out of the middle, okay? Also, important prices and important areas are almost always tested. So look what happens. After we get up to 3 points, we get back above the trigger, and away we go again. Now it's payday, okay? Now it's time to cash your check. What do we get for a swing low? We get a swing low down at 20, 12, 25. 20, 12, 25. 20, 12, 25. Okay. So 12 and a half and 12 and a half would be 25. So that's about 12 and a half points. Okay. Not going to get all 12 and a half of those points, though, because that's not how we do business. As price pulls back, you're going to get stopped out with a portion of the profit, okay? Now, let me entertain you for just a moment. When you become a mentoring student, you own the CFRN indicator set for life, okay? Now, right there, you see that candle? That candle closed at 2017 and a quarter. Based on what I teach you, that's where you would be exiting that trade. Unless you learn something that I haven't taught you, right? 2017 and a quarter. It's kind of like open source software. We built this almost like Legos so that you can take the individual pieces and parts of what we have and you can go build your own stuff. Ask a partner. We've got lots of stuff that partners have built. Pretty cool stuff. All right. So 2012 and a quarter is a swing low. You're telling me that if I follow your instructions, I'm going to get stopped out at 17 and a quarter with profit. Yeah. And so 17 to 25, that's 8. So 7.75. Okay. We're still not writing any letters home, but we're not crying. Now, as we roll into the final day of the week, okay, which was Thursday, because yesterday was Good Friday, we said to consider buying 2023. Okay. There's 2023. Of course, we're going to exit before the market closes. The swing high is 30 and a quarter. And so as we're moving in on the close here, we're not going to push it to the last minute. Futures, of course, do continue trading after the New York Stock Exchange stops. So if this has a high of 20, 30 and a quarter, let's call it 2029, right? Is that fair? I think so. So that's 6 points. Okay. So, not an incredible week for the S&P. We had other concierge trade alerts throughout the week. We had lots and lots of trades in the live trading room. And then the one trade a days. Remember, the one trade a days costs you $75 per month per market, minimum of 2 markets. So we're talking about $150 spend per month. In these 2 days, we had a 6-point trade, we had a 7-point trade, we had a 3-point trade, and we had one trade that might have possibly gotten stopped out. Okay? Now, think about this. If your goal is 2 points a day in the S&P, and we've all heard the old saw about how, man, if you could just take 2 points a day out of the S&P, you'd never have to worry about anything again once you build up your number of accounts. Problem is most people want to go rob the 401k or the IRA or Aunt Ida to get their money to trade the more contracts, and they're not ready to trade more contracts. That's why we're insistent that first you have to qualify to go live. Once you go live, you have to increase your account balance by $2,000 to add a second contract. Once you add the second contract, now we're going to go on a calendar-based system. The calendar will tell you when you're ready to add number 3 and number 4 and then number 5. Here's the point. Every contract you add after number 1 will always be underwritten and paid for by profits you earned in the market. In other words, this trading business that you're building from the ground up on a solid foundation, you're fueling your growth internally. You're bootstrapping it, okay? If you're a Silicon Valley fan, you've heard the term bootstrapping, and that's exactly how we grow these trading businesses. We bootstrap them. We go in, we make money, we add contracts, we make more money, we add more contracts. Before you know it, President Obama is calling you one of America's wealthiest. How about that? All right, you ready for more? All right, let's jump to the Dow. First thing we're going to do is we're going to clear this screen, make it all disappear. And we're going to go YMM6. That's the Dow. Okay. Now, I got to back this thing all the way up to Monday, the 21st, and I got to find 11:30 a.m., which is right there. Okay. 11:30 a.m. Now I've got to switch this chart over here to the Dow, And I got to pull it down to the 21st. And then I got to drag it into view. On the 21st day of March, we were looking to buy 530 and sell 440. Say that again. 530 and 440. That's what I thought. Okay. $530 came into play. A whole lot. How much is a whole lot? Hang on, I'll tell you. First, let's talk about the Dow. It pays $5 a point. The S&P pays 50 a point. The S&P and the Dow have a 10-to-1 relationship. On any given day, when the newscaster says the Dow was up 200 points today, that means the S&P was up roughly 20. And if the S&P was down 10, the Dow was down 100. All right. So 17,530. 17,530. Okay. Our first trigger takes us up a whopping 3 ticks. And it comes back, way back. Now, one of the things I'm going to teach you in our one-on-one sessions is this particular trade and this particular trigger probably has more risk than you want to allocate to an individual trade. Am I suggesting that you just walk away? I am. There will be trades, there will be times when you evaluate a chart, you learn to read the chart. See, that's part of learning how to trade, is learning how to read a chart. You'll read the chart and go, no, I'm not willing to risk that much for the potential reward that I'm being offered. So you'll wait, or you'll look at a different market, okay? Now, this trade, a little different story. I won't get into why, but we have a swing high here at 45. That's 15 points, okay? Now, important prices, important areas are almost always tested. What do we got? Got 45 again. So it's another 15. By having the knowledge to walk on the first one and take the second one and the third one, got 30 points. We only need 20. Why do we only need 20? Because at $5 a point, 20 times 5 is $100. And if you're trading the 2420 blueprint, your goal is $100 per contract per day. All right. So here, we're in this, but we're not stopped out of this. Okay. The market makes 11 available, and then the market makes 8 available. 11 and 8 is 19, and then the market makes another 15 available. Okay. So I just put the 15s up there, but don't forget there was an 11 and an 8 in there. Okay. Moving along. The sell side of that trade was 440. Here's another one. You're not interested in trading this. doesn't have the proper structure, okay? And so when it doesn't have the proper structure, you just pass. Arizona passes. That brings us up to March the 22nd at 11:30. It's every day at 11:30, okay? So on the 22nd at 11:30, we're looking to buy 530. Again. Oh yeah, I remember. Yeah, we had 2 days where the market moved so little that it, when I run the numbers, it is what it is. And I don't change them because I have a bias, because I think, this or that's going to happen. I trust the process. And that's what's made all the difference in the world, is once I found the definable edge, I just said, I'm going to trust this. I'm going to trust the process. So first move up takes us to 51. Okay, that's 21 points. 21. Not 31, 21. Important prices, important areas. Boom, boom, boom. We end up with a swing high at 21. Okay. So that's 42 in those two trades. And if you're just trading the blueprint, the 2420 blueprint, you're done for the day. The short side on that one, I think, was it the same? The 22nd, selling, no, it was much different. On the 22nd, we were selling 485. Numbers came out quite a bit different that day. And so, let's find 485. It's going to be here, and then here. Now the Dow is one where you'll get a lot of small profitable trades, which is why we don't go crazy with our risk. From 85 down to 70, there's 10. Remember, we already had 42 up there. We only need 20. Still the same trade, same set of numbers. Okay. And then we put in a swing low at 76. Now, chances are you're going to manage your risk properly, and it's here that on this pullback, you'll take your profit. Now, what the market made available was 44. So from 85 to 44, that would be, let's see, 45 and 40 would be 85. So let's call it 40, right? If we go 44 and 40, that's 84. So it's 41. All right. If it wants to be 41, let it be 41. Here's the other thing. And wait a minute, Jack, I can't trade around the clock. Yeah, no one expects you to. Get it and go. Get your points for the day. You're done. So whether you do it in the afternoon or you do it at night when you come home from work, you still have the day job. Now remember, the alert's good until the trades come out the next day at 11:30. Can't forget that, right? Because that's all part of how this works. So let's get our arrow in at 11:30 so we don't lose sight of that, because you see this is going to make a whole lot of difference. This swing low, sad to say, this didn't quite qualify. It needed to get up to 86 to reset the trade. It only got up to 83, but 85 down to 26. So if it was 25, it was 85 to 25. That'd be 60. So what are we talking, 59? All right. Now, that trade, this is off yesterday's number, okay, which is good until the next day's number comes out. And this trade triggers at 8:30 a.m. Eastern. Lots of folks trading at 8:30 a.m. Eastern. And so you grab your points for the day off yesterday's one trade a day. If you didn't get it yesterday afternoon, if you didn't get it last night, if you didn't get it around midnight, then you had it here, times 3 practically, your daily goal. All right, which brings us up to the 23rd at 11:30 a.m. Word of the day on the 23rd, we're looking to buy 455 and sell 410. Okay, we know how to do that. 55. And 410. All right. Now, I'm going to tell you something that's going to blow your mind. Or not, I don't know. If you hung out with Dr. Tim back in the 60s, probably nothing much blows your mind these days. But you see this trade here? Remember the other, I talked to you about some of the other trades. I said, you know, we probably wouldn't be in that trade. Now, this trade went from 55 all the way up to 84. That's 29 points, but guess what? We probably wouldn't be in this trade. Why? Same reason we wouldn't be in the other trades. $410, we dropped to a swing low of 87. Not, just call it 23, because that's what it is. Market made 23 ticks available. Not knocking any home runs, just base hits. Now, remember that the S&P and the Dow, they have this correlation where it's a 10-to-1 ratio, but if one of them is range bound, the other one's going to be range bound right along with it. So from this number here at 410, and we drop down to 94, that's going to be 16. How many do you need to be done for the day? 20. And so we get another drop. That's probably about 16, and then we get this drop that is, well, let's say you just were in it to this point, 82. So that would be 30, that'd be 28. You see how many opportunities you have in the course of a day, even on a slow day, on a cramped day? What did I say, 23? Is that what I said? 28? All right, I guess I got to figure it out again. Swing low, 82. 28, I think. If I ever get the numbers wrong, feel free to send me a letter. On the pullback here, we need to get above the trigger to reset. We didn't quite do it. And that can be frustrating because of this. You're like, man, I missed all that. Now, there is a possibility you didn't get stopped out here. Really? You're kidding me, right? I don't know. Let's see. Oh, how close were you trailing your stop behind the BBC? I mean, were you just like right smack dab on top of it? Or were you behind it a little bit? I'm not saying you'd still be in the trade. I'm saying, based on what I teach you, you might still be in the trade. Okay? Okay. See, you may not always like what I tell you, but I'm always going to tell you the truth. The good, the bad, the ugly. Truth is such a beautiful thing because it's so much easier to remember. On the 24th, we were looking to be long above 390. What's a fellow to do? Well, go long at 390, I guess. Now, short side of that, did we get drug into the short side, 330? We may have. Yeah. Because see, this is the trigger candle, 1130. So 330 is right here, and so the swing low. Yeah, there was actually 24 points right there. 24 points. Okay. Now from 17,390 to 463, 73 points. 73. But you're going to get out before the close of the day. So let's say you only get 50 or 60 points. You only need 20. And so it wasn't the greatest of weeks in the S&P and the Dow. But do you see how you were able, remember, at 2 points a day on the S&P or 20 points a day on the Dow. So in the Dow, 5-day week, that's 100 points. On the S&P, it's 10 points. Did we cover what we needed to do? Did we get the job done on a range-bound week? Yeah, we did. Okay, let's go to the Russell. Oh, can't go to the Russell because I'll have to mess that chart up. I cleaned this chart up specifically so we would have a chart that we could do this exercise on. RLMM 6. There we go. Don't forget, April 1st looms large, and everybody has to make the decision if you're going to trade the Russell or not. Okay? I can only say if you're profitable on the Russell, we're talking about 1 point on 1 contract per month. That's what the data will cost. Okay, $100. If you're not profitable on the Russell or you don't even trade the Russell, then I can see no reason why you would want to pay for the data. But ultimately, you have to decide and you have to opt in. It's not something that they're just going to bill you for. You got to sign up and say, yeah, I want this. And they'll sell it to you. ICE, baby, ICE. The ICE exchange. Okay. All right. Here's the 1130 candle on the 21st. So I've got to take us over here, and I've got to go find the Russell market. There it is. And I'm going to drag it down. Okay. So on the 21st, on the Russell, here's what we said. Buy 1097, sell 92. We didn't get the 97. We did see, or did we? 92. 92. Come on, 92. Baby needs a new pair of shoes. Oh, me. What are you guys going to do when I decide to Do something different. What are you going to do? Where will you get your entertainment? Lord have mercy. Okay. Okay. All right. So here's the 1130 trigger. 92 takes us down to a swing low of 90.1. That's 19 ticks. It's $190 per contract. Important prices, important areas are almost always tested. And so down we go. This time we drop to 89.80. And so that's going to be 22 ticks or $220 per contract. You with me? So that's about $400 per contract, but you're not going to get out at the exact swing low. As it starts to pull back, you're going to get stopped out. All right? All right. Here, you might not have been in this trade based on what I teach you. And you might be, and if you are, yeah, you got stopped out. Okay? But I don't think you'd be in the trade. Now, we got to stretch this over. Okay. Swing low here. 91.1. There's another 19. Another $190 per contract. So basically, no, wait. That's 92. Oh, no, I'm sorry. That's $90 per contract. Pardon me. Okay. Pardon moi. Okay. Now we drop all the way down to 84.90. So we'll call it 85. 85 to 92, 7 points, $700 per contract available. The Russell, 700 per available. You can't really be trading the Russell at this time of day. Actually, what time of day is this? See, here's the London Open. You're like, well, why can't I? Well, okay, let me show you. S&P, gold, crude, euro, you can trade at any time of day. This big drop, there were 700 contracts in that move. Okay. In that 30-minute period, there was 386 in that 30-minute period, and there was 106. Actually, the Russell has started to pick up some volume off the London Open. It used to be, it wasn't really tradable at all. And then suddenly it was. So anyway, now we've got ourselves into the new day, and we got to put a new arrow at 11:30. It's 10. It's 11:30 right there. Okay. All right. What day are we on? We're on the 22nd. 22nd. Long above 97, short below 90. Okay. You get the 97. Well, we made it to 90. We got all the way down to 88. It's 2 points. But look at the time of day. See? Now, as soon as Wall Street opens, in fact, yeah, the second Wall Street opens, look, this thing jumps up and gives us 13,000 contracts in 30 minutes. And so what price are we selling? Now, remember, it's 9:30 on the morning of the 23rd, which means we're still trading the numbers from the 22nd. Short below 1090. Here's 1090 way up here. from 1090 on the morning of the 22nd, or I'm sorry, at 11:30 a.m. on the 22nd, we said to be short below 1090. Here we are on the morning of the 23rd, waiting on our new numbers, and the market hands us this incredible trade. It takes us from 1090 all the way down. Oh, 1090. No, that's the new candle, so we can't go there. So the swing low of the move, 76. So from 1090 to 1080, so that's a $1,400 per contract move. Do you get all $1,400 per contract? No. That would be illegal, immoral, or fattening. 1,400 per available. Okay. And it happened at a time of day when there was plenty of volume, and there's no reason where you can't partake in that. And with the indicator set, you would have actually still been in the trade when you had to get out. And the only reason you had to get out was because it's time for the new numbers. And you could wait to see what the new numbers say, because the new numbers might jive with what you're already doing. So now we're on the 23rd at 11:30 a.m. Eastern. And it says long above 82, short below 76. Okay. We don't see 82, but we sure see 76 coming back down right there. And from 76, we drop to a low of 70. So that's $600 per contract. There. Now, if you stayed with the trade, well, now we're into the next day. So was it a great opportunity? It was. And that brings us up to 11:30 on the 24th. And that was our holiday rally. Okay. So is that 11 o'clock? Here's 11:30. So you've been keeping track of these numbers. I don't know if I mentioned, but it's $75 per market, minimum 2 markets per month. We do have a special right now that allows you to get into the 90-day mentoring program, but not just for 90 days, but for 12 months. 12 months of weekly trading zones, 12 months of workshops, 12 months of live trading room, 12 months of concierge trade alerts, and 12 months of 1 trade a days. It's a lot. I won't kid you. On the 24th, word was go long 68. Okay. Long at 68. So that's going to be right here. Of course, important prices, important areas are almost always tested. First run up takes us to 70.1. So that's $200 per contract. Then we get back below and off we go. And this time we make it all the way up to 75, 80. So if we got in at 68, 75, that would be roughly $700 per contract. That's what the market made available. Now, with the indicator set, you'd still be in the trade when the market closed, but you don't want to be in the trade when the market closed. You may want to get right back in the trade when the market reopens Sunday night on Globex. But this is a beautiful, beautiful, beautiful 68 to 75. That's 7 points at $100 per point. It's $700 per contract. That's what the market made available. Now, we also traded crude oil and bonds and the NASDAQ and soybeans. But I'm going to end this video now for the sake of brevity. And maybe tomorrow, while I'm waiting for Globex to open, I will go ahead and recap the other markets. I'm not recapping them because we had a rough go at it. We didn't have a rough go any day at all last week. Every day was good. The markets have been extremely kind. That's why I encourage you, if you've been putting off getting involved in trading. I'm not trying to convince you to become a trader. I don't ever do that. But if it's something you've been considering doing, something that you want to do, you feel the call, you know it's where you should be, or at least you feel it's where you should be, the markets right now, because of geopolitical tension, because of the presidential election, because of things the Fed is doing and may do, volatility, well managed, is a trader's best friend, okay? And so we have volatility, and we teach you how to well manage it using our style of aggressive risk management and our indicator set, which once you become a partner by entering the mentoring program, whether you are a partner, if you just, maybe you just want to go with the 90-day mentoring program, that's sufficient for you. And then maybe after the 90 days, you'll just stay attached to the hip with the monthly maintenance fee. That, you can still do that. You don't have to take the 12-month package. It's just that it represents such a tremendous bargain because of all the different pieces of the puzzle that you get. So you'll know what's right for you. Spend a week in the live trading room, okay? Now, the current special is going to run through Sunday night. It's going to expire tomorrow night, 12 p.m. Pacific. Sunday night, 12 p.m. Pacific. But don't let that pressure you into making some kind of a decision, all right? You should only become a partner. You should only become a partner if you've already taken the trial, you've already used the indicators, you've already shown yourself that you can be consistently profitable with our methodology, okay? If you're not 100% convinced of that, then you should not become a partner. You should not sign up. You should wait. But the price will go up and I'll have to pay more. Big deal, okay? This is a major life decision. This is right up there with marriage, divorce, births, funerals. I'm telling you, this is a major life decision. And so you know if you're ready or not. If you're ready, now's a great time. But if you're not ready, then it's not a great time. If you need somebody to talk to, call me. We'll do a mentoring session. I'll try to answer whatever questions I can. 949-42-EMINI, or email support@cfrn.net. If you want to see some of our work firsthand, go to emini.cfrn.net, emini.cfrn.net. That's our Google Plus page. There's over 1,000 hours of live webinars, seminars, Q&A sessions, radio shows, articles, tips, techniques, charts, recaps. Oh my goodness. And it's free. That's our way of giving back to the community. It's our public access library. You can go there, hang out as much and as often as you would like. Okay? And that will help you make the decision whether or not this is right for you. Okay? There's no get rich quick. Not here, not nowhere. Okay? If you want to learn how to trade for a living, you're going to have to work for it. You're going to have to learn discipline. You're going to have to learn to think in probabilities. You're going to have to probably unlearn some bad habits, as we all did. But the good news is with this simple methodology, you can make it. And you won't be forced to learn a bunch of stuff you don't need. We're only going to teach you as much as you need to know to be consistently profitable and earn $100 per contract per day. Am I guaranteeing you'll make 100 a day? I can't do that because I don't know how hard you're willing to work. I don't know if you're a Todd. You may not be a Todd. You may be somebody else, and I won't call any names, but I don't know what work ethic you're going to bring to the table. And even if you have a great work ethic and you try really, really hard, trading's not suitable for all people. It's risky. You can lose all of your money and then some. Consult with a licensed professional before making any investment decision. Happy Easter. God bless. I'll see you in the live trading room Monday morning. All right? Be there, or how do they say that? Be square? Okay. Don't be square. Be there. See ya.